All right. Good morning, everybody. Good morning, everybody, and happy Monday. Today is, what day is today? December 16th, 2024. The new week is upon us, and we're starting the week with news out of China this morning. We got more bad economic data over the weekend. You know, we've heard a lot about China over the last couple of months. We've heard a lot about stimulus and, oh, are these stimmies, is it the fire hose or is it just like half measures? And of course, the Keynesians and Bloomberg and CNBC are out there with their standard reply to bad economic data in China. Chinese just need to print more money. They just need to do more helicopter money, because that is always the standard response from the financial press here in the States. But guys, the things in China, they just keep getting worse. Now, the data we got this morning was retail sales. It was a miss to the downside. Year-over-year growth came in at 3% for the month of November versus 4.6% expected. We also got some details on Chinese real estate investment. That was down 10.4% year-over-year for the month of November. That's after falling 10.3% year-over-year last month. Now, that's important there because it shows all of this effort and all of this stimulus and all these announcements of this rate lowered and that rate lowered. The Chinese real estate market continues to decline, and it is still accelerating to the downside. And this is the one thing that I think the people in Bloomberg and CNBC, they don't quite understand. And it's their Keynesian training doesn't allow them to understand it. It doesn't matter how much money you pump into the system. There are too many buildings in China. They're still building more of them. They still sold millions of apartments that they haven't built yet, and their population is shrinking. And you can't print people. And so no matter what they do with their stimmies and their liquidities and their stimulate demand and all spur consumption, all of that shit, no matter what they do, the real estate property sector is going to continue to fall. There's just not enough people to live in all of these buildings. They don't understand that. And when they make more loans in order to shore up liquidity at the developers so they can deliver on these buildings they've already sold, they're making that underlying problem worse. Now, they're trying to save their banks to prevent the collapse of those banks, because all those buildings that haven't been built yet, they've all got mortgages on them. They've already been sold. People are making payments on apartments that don't exist. How long can you keep that up for? Well, in communist China, longer than you can anywhere else, because they disappear you if you don't pay. But at the same time, if you actually build these buildings, if you do what they're trying to do or that they say they're trying to do, shore up liquidity to, get a delivery of these buildings done, then what are you left with? Okay, we saved the banks, but now we've got 20 million more apartments. And wait until the next round of population data comes out, because we saw a couple of years ago, China's population shrank for the first time. It shrank by just 100,000 people. And then the year later, it shrank by about 2.5 million. What's it going to be next year? I don't know, 8 million, 10 million? China's population is in collapse. They're not having babies because they can't afford a place to live, because the property sector. So no matter what they do to stimulate consumption, it's not going to work. There's no way around this pain. The only way past it is through it. You can't get around it. They haven't quite figured that out. And another thing that's going on, again, suggesting just how bad things in China are, there's an article in Bloomberg this morning about tanker rates. The Baltic Index from the Middle East to China for these VLCCs, or very large crude carriers. The spot rate to ship a tanker full of oil from, say, Iran to China is down by a third this year. Total oil imports are down by 2% versus a year ago. All right. So how does an economy grow 5% year over year while using 2% less oil? The short answer is it doesn't. These Chinese growth numbers are BS. But it just goes to show you, why is OPEC delaying the increases in production? Why are oil prices stuck in the high 60s, maybe just above 70 like this morning? Because China's economy is in free fall. They're using less oil. It's the second largest economy in the world, and it's hard to cover that up. Other stories making news this morning. Supermicro, my favorite fraudulent company that still somehow hasn't been delisted from the Nasdaq. Well, they kind of got delisted. Not quite. It's not a delisting, but they did get the boot from the Nasdaq 100. They are no longer part of the Nasdaq 100 index. Now, that's different than a delisting. A delisting is when they kick you off the exchange because you're run by crooks. but they're no longer one of the 100 biggest companies on the Nasdaq. Supermicro Computer is out of there, along with Moderna and Illumina. They're being replaced by MicroStrategy, Palantir, and Axon. By the way, speaking of MicroStrategy, they're in the news. They're buying more Bitcoin this morning. The price of Bitcoin hit 106,000 last night. It's down around 103, 104 right now. But SMCI out of the Nasdaq 100 index, and this story broke late Friday, just a few hours after the rumor started swirling, and there was an article in Bloomberg that Supermicro has tapped Evercore for a cap raise. They're raising capital. They're either going to sell debt or they're going to issue shares. I'm not sure which one. There was scant details in the article. But if Supermicro is this number one company and, our server demand is insane and we're selling so much product, and no, never mind all these rumors that we're a bunch of crooks, why are they raising capital if their business is so good? Things at Supermicro not looking so good. And guys, I was shaking my head for weeks. We watched that stock go from $17 to like $45 on what? On nothing. On just the delay of the delisting. Now the stock is back around $30. It's given up about half of those gains. Still at an obscenely high valuation considering it's a fraudulent company. But again, this stock market is like the equivalent of Ron Burgundy's teleprompter. If you put a question mark on Ron Burgundy's teleprompter, he's gonna read it that way. If you put Supermicro stock in front of these retail bros, they're gonna buy it. And so everybody bought up Supermicro stock. They bid it up to $45 on nothing, and now it's back down to 30, and it's probably going to go lower. There's going to be ups and downs. But guys, this thing is going to end up delisted. This company, it's dead money for the foreseeable future. Also, Germany is in the news today. The no confidence vote for Chancellor Olaf Scholz is scheduled for today. And there's a story in Bloomberg that kind of gives you an idea about why and just how bad they have just run Germany's economy into the ground. This is what happens when you put freaking Greta Thunberg in charge of a country. You end up with the story in Germany where the average German citizen is 2,500 euros per year poorer right now. That's about $2,600. And that is per year. And that is not inflation adjusted, which means the average German's net worth is falling while their cost of living is going up. But hey, at least you got your solar panels. So good luck with that. You can't afford to eat. You're losing your house. You can't pay the rent. But hey, solar, good luck. Well done to Chancellor Olaf Scholz and Robert Habeck and all the other imbeciles that have systematically destroyed what was the world's third largest economy in just a matter of few short years. And SoftBank is in the news this morning as well. Masa-san is supposed to have this announcement with President-elect Trump about $100 billion of investments in AI infrastructure in America. Please, President-elect Trump, don't have your new Department of Justice investigate me and my many frauds that I'm invested in. So SoftBank's going to round trip $100 billion of their money. It's almost certainly going to be spent on data centers that buy chips. Then those chips are sold by the companies that SoftBank owns. They're probably going to borrow that money from private credit, which brings the implicit guarantee of the Federal Reserve, even though they're not banks. Round and round we go, round tripping, channel stuffing, rinse, repeat, AI bubble inflates further. We got a lot going on this morning. Why don't we shrink my big melon of a head and let's see what's happening in markets, shall we? And guys, this is typically where I ask you to inflate that like button. And if you're new here, hit that subscribe button so you can come and have your coffee with the melon heads, because we do this every morning. And right now, the S&P 500 is up 18 points or 0.3% higher. In lieu of catastrophic economic news, the stock market only ever goes higher. We've seen this one before. The Dow, meanwhile, is up by 76 points, 0.17% higher this morning. And the Nasdaq 100 is up by 106 points or about 0.5% higher. Meanwhile, the DXY is down about 10 basis points here, but still threatening to break above 107. We're at 106.9 on the DXY. And looking over at the bond market this morning, we got yields are lower pretty much across the board. The 30-year Treasury, 4.590. That's down by about 2.5 basis points. The 10-year, 4.373, down by 2.5 points. The 2 years at 4.226, down 1.5. And the 1 month is at 4.308. That's down by 0.5 point. That within a couple of days, that's going to be 4.25, guys. The Fed is almost certainly going to lower by 25 basis points on Wednesday. Also going on, we got the commodities board. Got a little bit of green and a little bit of red in commodities this morning. Spot gold, $2,660. That's up by about $12 or 0.45% this morning. Spot silver is at $30.68. That's up by about 12 cents or 0.4% higher this morning. I like the shiny. Copper is up by about 0.25%. Platinum is up by 2%, and palladium is 0.5% lower. WTI crude oil is at $70.51 for January futures. That's lower by about 77 cents or about 1% this morning. And speaking of commodities, one of the ones I wanted to talk about was beef. We mentioned this one briefly last week, but we had this one in Bloomberg this morning that my moderator, Mish, found. Mish, good catch, sir. A severe shortage of cattle, which has fueled grocery store price hikes and wiped out billions in meat processor profits, is primed to get worse. The U.S. beef herd is already the smallest since 1961. After years of depressed prices, severe droughts, and surging costs forced farmers to send more females to slaughter. I would also add that an artificial bottleneck in the meatpacking industry has created these conditions. I met a couple of cattle ranchers at conferences over the last couple of years, and every one of them said the same thing. Even though the price of the steak, the price of the meat in the supermarket was going sky high, the price that the ranchers were making was heading lower because there just weren't enough meat packers to process the cattle. So you had all these cows upstream and not enough people to process them into meat, resulting in shortages of meat. And, well, you just can't do that. You can't abuse your ranchers like that so long and expect there not to be consequences. And now the U.S. cattle herd has shrunk to the lowest level since 1961. Now, guys, well, we'll talk about that in a minute. Now the prospect of new tariffs and immigration reform risks constraining supplies even more. The U.S. Department of Agriculture isn't expecting a recovery in cattle inventory until 2027. Now, look at this chart here in Bloomberg. This is showing the size of the U.S. cattle herd. And the last time we were down here was 1961. Now, here's the thing, guys. In 1961, the population of the United States was about 182 million. All right, slightly more than half of what the population of the United States is now, but we had the same number of cows. That give you an idea of what they're doing to the affordability of meat. Do you wonder why meat is so expensive, why people can't afford to put a steak on the table, and why they're trading down to chicken or ground beef? We have the same number of cows we had when there were half as many of us freaking 65 years ago. So once again, the people managing the economy, what a fine job you guys have done. Also, Bitcoin is higher this morning, 104,000. Now, that is showing it's down $300 versus yesterday, because at one point yesterday, we went as high as $106,500. Now, we're down off of those highs here, but still looking pretty good. Bitcoin is moving higher, and we got a couple of reasons for that move in Bitcoin here. MicroStrategy, of course, chief among them. We got this one this morning. MicroStrategy has acquired 15,350 Bitcoin for $1.5 billion, or at $100,386 per Bitcoin. I'm going to skip over this BS talking point about the yield that Michael Saylor likes to talk about. That's just basically the Bitcoin is higher than what they bought it at. As of December 15th, 2024, MicroStrategy has 439,000 Bitcoin that they've bought for $27.1 billion at an average price of $61,725. So Saylor is in the news again today, buying about $1.5 billion of Bitcoin. How did he pay for it? Well, we got this one from Walter Bloomberg and Twitter. MicroStrategy sold 3.89 million shares under a pact for about $1.54 billion. So Michael Saylor's infinite money glitch is still working for the time being. I want to put an asterisk on that. Michael Saylor is a freaking wild man when it comes to risk tolerance. What he's doing is a dangerous game. It's working for him now. I just hope he prepares for Bitcoin winter and he doesn't get liquidated. That is becoming a bigger and bigger risk to the price of Bitcoin here. But in the meantime, number go up. Now, let's talk about this one here. This is the big story today. China's November retail sales miss expectations as real estate slump deepens. The data just keeps getting worse in the world's second largest economy. China's retail sales disappointed in November as sentiment in the real estate market weakened further, and another sign that Beijing's efforts to boost the economy have failed to revive sluggish demand. Retail sales rose by 3% in November from a year ago, according to the National Bureau of Statistics. Data released That's according to data released on Monday, missing the forecast for 4.6% in a Reuters poll. Now, guys, I just want to remind you, economic data coming out of China, you always have to be very skeptical of this, all right? They're saying retail sales rose by 3% in November, according to our perfectly independent and not at all communist-influenced National Bureau of Statistics. But even those government-fudged numbers are showing a big miss here, 3% growth versus 4.6% expected. Now, I also want to add, guys, we do the same thing here, right? Our jobs numbers, our inflation data, it's all manipulated, but they've made it an art form in China. Now, that marks a sharp slowdown from the 4.8% growth in the previous month. Retail sales in October had recorded the quickest growth since February, helped by the annual Singles Day shopping festival that kicked off more than a week earlier than the event in 2023. But the slump in real estate investment for January to November, that period deepened, shrinking by 10.4% from a year ago, following a 10.3% decline reported in January to October period. So real estate sales, real estate investment continues to fall. It's accelerating to the downside. The world's second largest economy has been contending with pressure from multiple fronts this year. Consumer and business confidence has been hit by a prolonged property downturn, local government debt risks, and high unemployment. All of those things continue to get worse. Now, you don't just see it in the retail numbers and the real estate numbers. You can see it in the oil markets here. Now, I want to show you this one in Bloomberg this morning. Tanker rates tumble on key route as China cuts crude purchases. Haulage fees from the Middle East have declined by a third this year, and the nation's imports ease on economic slowdown and fuel switching. Now, fuel switching is another one that Bloomberg has been talking about a lot. They've been doing a lot of changeover from diesel to LNG to power the larger trucks in China. And that is also taking a chunk out of their crude imports. Spot rates for hauling crude on the largest vessels from the Middle East to China, a benchmark route, have sunk by a third this year as demand in the top importer slows and OPEC Plus delays the restart of idled supply. The industry's go-to measure for the route, which excludes loadings from Iran, typically rises in the final quarter of seasonal factors compared with the preceding 3 months, but it's bucked that trend this year. And they're showing this chart here. This is showing spot rates from the Middle East for VLCCs. That's very large crude carriers. That's the big mega tankers. And look at what the routes have done. This is, again, what they just mentioned. This is typically the time of year where the costs start to go up, but they have fallen dramatically here over the course of the year, down by more than a third. Oil traders are zeroed in on soft demand in China, with year-to-date imports running almost 2% behind 2023's pace as policymakers grapple with the slowdown that's hurt raw material demand. At the same time, a shift toward electric and LNG-powered vehicles has eaten into some crude usage. That's helped to put crude prices on course for a back-to-back annual drop. OPEC Plus, the crude producers alliance that's led by Saudi Arabia and Russia, has delayed the progressive restart of idle capacity 3 times in a row, reflecting the challenged demand outlook as well as rising supplies by rivals. That's effectively reduced the volume of potential cargoes on offer. So it's getting cheaper to haul oil into China because China doesn't need that much oil. Supply and demand showing up in the freight rates, not just the oil markets here. So, and again, guys, when you see charts like this is one reason why I say these economic numbers out of China, you just can't trust it because they're claiming they've still got 5% GDP growth. How do you get 5% GDP growth while using 2% less oil? The answer is you don't. The statistics are BS. That's the answer. Now, speaking of running your economy into the ground, Germany's saying, hold my beer. Germany is unraveling just when Europe needs it most. High energy costs and slumping exports have made German households 2,500 euros poorer, and the decline threatens to become irreversible. My, what a wonderful job you've done running your economy, Germany. Germany is reaching a point of no return. Business leaders know it. The people in the country feel it, but politicians haven't come up with answers. Do you notice a change in the sentiment in Bloomberg where they've gone from the green revolution and the energy transition and, oh my God, the new economy and all this stuff Kathy Wood says, basically copy and paste that into the way Germany runs their economy, and that's what you get. And now all of a sudden they're saying, past the point of no return, the country can feel it. Look at it. Look at what a dramatic shift in the language here. It's just a shame that it took so long for this to happen and they had to destroy so many people's lives before they noticed it. This has set Europe's largest economy on a path of decline that threatens to become irreversible. Following 5 years of stagnation, Germany's economy is now 5% smaller than it would have been if pre-pandemic growth trends had been maintained. More worryingly, Bloomberg Economics estimates that the bulk of the shortfall will be tough to recover due to structural blows such as a loss of cheap Russian energy and Volkswagen and Mercedes groups struggling to keep pace with China's auto firms. The decline in national competitiveness means every household is off by about 2,500 euros a year, or about $2,600 US. And that is per year. That is, it keeps getting worse, even as the cost of living keeps going up. The income keeps going down. And they're showing some of the many charts here: energy, demand, domestic demand, supply and chain. We don't have time to get into every one of these charts here. But with Chancellor Olaf Scholz expected to lose a confidence vote on Monday, snap elections offer a chance for a change of course. But the trend of gradual decay creates little sense of urgency. The risk is dull policy responses that lack the ambition needed to tackle underlying challenges. Now, I agree a big response is needed, but I don't think what's needed is what Bloomberg is suggesting. I think Bloomberg is suggesting printing more money and pouring even more of it into windmills and solar panels. What they need to do is reverse their obscenely idiotic energy policy. They need to get rid of that. They need to stop printing money that penalizes savers, but don't expect that to happen again, because the answer is almost certainly going to be print more money. Wait till Christine Lagarde and the idiots at the European Central Bank get a hold of this story. I'm sure they're going to do just wonderful things with that. Now let's talk about the changes in the Nasdaq going on this morning. Palantir, MicroStrategy, and Axon join the Nasdaq 100. Moderna, Supermicro get the axe. Palantir Technologies, MicroStrategy, and Axon, 3 of the hottest stocks in 2024, will join the Nasdaq 100 index before the open on December 23rd, Nasdaq said on Friday. Now, guys, pay attention to that, because MicroStrategy joining the Nasdaq 100, that means a lot of ETFs are going to have to buy MicroStrategy stock. That means MicroStrategy stock is probably going to go higher. That means MicroStrategy stock will trade at a higher premium to the Bitcoin that MicroStrategy owns. And that means Michael Saylor's probably going to issue more shares and buy more Bitcoin. So this MicroStrategy joining the Nasdaq could actually propel Bitcoin higher. I know a lot of you guys are rolling your eyes at the infinite money glitch, but it's still working for now, and it's probably going to get worse. Now, Palantir reversed slightly lower Monday morning with its Nasdaq 100 entrants largely expected. MicroStrategy and Axon rose. On the way out is Moderna, Supermicro, and Illumina. They're among the smallest Nasdaq 100 members. Moderna stock has plunged in 2024, while Supermicro has dived from its March peak amid major accounting woes. Illumina is up slightly in 2024, but has been trending lower since early 2021. So Supermicro is out at the Nasdaq 100, and that is not the only bad news for Supermicro. Over the weekend, we got this one. Supermicro Computer taps Evercore to raise capital. Why are they raising capital if they're such a strong company with such a strong balance sheet and they expect no material changes to any of their BS accounting over the last few years? Why are they raising capital then? It's interesting. Supermicro Computer has bought on Evercore Inc. to help the company raise capital, according to people familiar with the matter, as the embattled server maker looks to shore up its finances, which they keep telling us are so great. Why do they need to shore them up? The maker of high-powered servers, which is trying to avoid a delisting after missing an August deadline to file its annual financial report, is considering raising equity and debt, the people said, asking not to be identified, discussing private matters. San Jose, California-based Supermicro is weighing a potential private investment in public equity, or a PIPE, and is approaching private equity firms to gauge their interest in participating. The people said, hey, do you want to buy stock in my fraudulent company? I can get you in at a great price. Right now, Supermicro shares are down 11.4%. I'm sorry, correction, down 13.6% pre-market, trading at $31.44. This was a $17, well, I'm sorry, guys, this was like a $100 stock. Then it was a $17 stock. Then it was a $45 stock. Now it's 31. What is the intrinsic value of Supermicro besides nothing point nothing? I don't know, but this thing is going lower, guys. There's probably going to be bounces along the way. If you're one of these banana bros and you want to YOLO into call options here and there, that's fine. You know, you just understand you're essentially buying scratch offs at 7-Eleven. That's what this is. It's the stock market equivalent of a scratch off. Meanwhile, SoftBank CEO and Trump to announce a $100 billion investment in the U.S. by the firm. Number go up, more round-tripping money in the AI industry. SoftBank CEO Masayoshi Son will announce a $100 billion investment in the U.S. over the next 4 years during a Monday visit to President-elect Donald Trump's residence at Mar-a-Lago in Palm Beach, Florida. Sources familiar with the matter told CNBC's Sarah Eisen. The billionaire investor and founder of the Japanese tech investing firm will also promise in the joint announcement with Trump to create 100,000 jobs focused on artificial intelligence and related infrastructure, the sources said. The money will be deployed before the end of Trump's term. The funding could come from various sources controlled by SoftBank, including the Vision Fund, Capital Projects, or chipmaker ARM Holdings, where the firm is majority owner. Some of the money will not necessarily be newly raised, but could include some funding already announced, such as SoftBank's recent $1.5 billion investment in OpenAI, the tech firm behind chatbot maker ChatGPT. Now, look, guys, they're going to create all these jobs, all this AI infrastructure. What they're not telling you is we don't have the power to run these things. Yeah, we're going to build $100 billion worth of data centers, and those data centers are going to have to buy chips from ARM Holdings. But then what are we going to do with them? Because these data centers use as much power as an entire city. And we sure as hell aren't building any new power plants in this country, which means everybody get ready for higher electricity bills. If they really keep going through with this, if they're going to keep doing this, then electric bills are going to start rising for everybody. So the good news is, folks, stocks are going to go higher. The bad news is your utility bills are going to double. But don't look at it. It's not all bad news. You'll still be told to, glue your pizzas together or jump off the Golden Gate Bridge. There was a story I saw over the last few weeks about Character AI. One of these chatbots suggested that a kid murder his parents because his screen time was being limited. I swear to God that actually happened. So yeah, AI is doing wonderful things for the country, I'm sure. Here's another $100 billion from SoftBank. Probably going to be borrowed yen converted into dollars. Right now, ARM Holdings is up 1.38%, $2 higher at $154 off of this news. And I just want to say thank you so much, Mr. Charles G. Thank you, Charles. He says they can't print people yet. Oh, yes, yet. Just give them time. I'm sure they'll be printing people too. And birthing pods are still being worked on. Oh, man, don't say it out loud. Somebody's going to hear you and make it happen. All these 1984, these stories like this, right? Terminator, all these dystopian sci-fi stories, they weren't meant as instruction manuals. And just people seem to have forgotten that. But yeah, they can't print people yet. But there is a way you can print people, Charles. You can conquer other countries and force their citizens to become your own. That is one way to deal with a population collapse. There's another country, Russia, is currently engaged in the same thing. They're trying to grow their population via conquest. So, the population collapse in China, it is very bad news for a lot of reasons. People printing and, birthing pods might be a little bit out there, though. But in the short term, conquest is probably the bigger problem. Thank you very much, Charles. And thank you, Kevin DeBella, who says, any idea where silver orders versus mining output is? No, I don't know. I can tell you the miners have largely sat out the rally in metals these days. And I'll be honest with you, I don't follow the junior miners very closely at all. They give me the creeps. Silver is expected to be at a deficit. I don't have the numbers off the top of my head, Kevin, but this is 2 or 3 years in a row now that the silver mining supply has been less than global demand. So, silver operating at a deficit means silver inventories will be heading lower, which should result in higher prices. Emphasis should. Never underestimate the market's ability to prove that one wrong, though. Right now, silver's still hanging out around $30 an ounce. There's still a lot of crowded short trades in and around the ETFs. We've seen that EFP premium has come in a little bit over the last couple of trading days, of course, since I said something. But that is still a risk. There's still a lot of upward pressure on metals prices. So keep an eye on that one. But no, I don't know exactly where silver demand versus supply is right now, although it is a deficit. I don't know the size of the deficit. That data is out there, though. Put a pin in that one. Maybe I'll be back to that one, Kevin. And thanks again, Kevin, for supporting the channel. Thank you also, Zeeblefritz, who says, if you haven't subscribed, do now to get NSF to 60,000. Well, thank you, Zeeblefritz. I appreciate that. I think we're about 100 shy of 60,000 now. We're right there. We're getting there. We got a couple of days left. 60,000 before the end of the year would be pretty nice. 61,000 would be even better. 100K would be swell. Appreciate the sentiment, Zeeblefritz. Thank you very much, sir. I appreciate that very much. And thank you, everybody, for having your coffee with the Melonheads once again this morning. I appreciate that very much. Shout out to my Patreon supporters and magnanimous Melonheads on YouTube. You guys are awesome. Thank you for everything you do for the channel. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.